Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss two home price reports, one from the FHFA and one from Case-Shiller, plus what's happening with deposits at First Republic. Today is Tuesday, April 25th, 2023. I am Byron Lazine, and the Hot Sheet starts now. As promised from yesterday's show, we got two big home price reports that were both just released at 9 a.m. today, one being FHFA and one being Case-Shiller. I'm going to go over both of those. The new homes report does not come out until 10. We'll probably have been signed off by that point, but we will cover that tomorrow. I know I mentioned that yesterday, but some people want to start around lunchtime of 10 a.m. on the East Coast. Let's get into the FHFA to start here. And we have an unexpected home price rise. Now, expectations for FHA were that these numbers were going to come in flat or potentially down. They did not. They actually came in up 0.5% for the month of February. So we've got a lot of these home price indexes and valuations that we've been talking about on the Hot Sheet. And so what is the FHFA home price index? It's a broad economic measure of the movement of single family house prices in the U.S. While FHFA produces the HPI by a statutory mandate, it began in 1995 with predecessor agency, the Office of Federal Housing Enterprise Oversight. Okay, so that's what the FHA home price index is. And let's get into some of the meat on what it said in its release this morning at 9 a.m. Home prices in the U.S. in February were up 0.5% from January. Seasonally adjusted monthly home price index, the home prices rose 4% year over year. That'd be from February to February. The previously reported 0.2% rise for January was revised downward in this report to 0.1% increase. That's where they were targeting. This one was closer to that, ends up being a 0.5 point up. For the 9 census division, seasonally adjusted monthly price ranges from January 2023 to February 2023. So for the 1 month, ranged from 0.4% being down in the South Atlantic region or division, as they call it, to a plus 2.3% in East South Central division. The 12-month changes were 2.7% down in the Pacific division and up 8.3% in the East South Central division. U.S. house prices increased slightly in February. Okay, the supervisory economist in the FHFA's Division of Research and Statistics was quoted as saying this increase was in part due to a decline in mortgage rates, which we've seen bounce back up since that time by more than a 0.5 percentage point from the peak reached in early November. Yeah, from the peak, that was a very short peak, as well as this historically low housing inventory. Okay, so we've got some charts here, and I'm going to put these all down below in where you can get all of our sources and our daily download each and every single day. Let's first look at their, let's see here what's going on. We'll look first at these divisions. We'll break those up once I get this screen fixed for us here in just a second. Should be good now. Of course it's not. Here we go. Apple, I've mentioned this before. They changed the way you can display your screen. What they don't want us doing is like live streaming YouTube or something on YouTube, right? Or they don't want us live streaming other content on a live stream, because we're on a live stream, and that's why this happens. I don't know. They don't want you doing a live stream on a live stream, apparently. So this works here. All right, there we go. Thank you, Apple. All right, monthly price change estimates for U.S. and census division. So U.S. again up the total of the 0.5%. The Pacific division down 0.3%. Mountain up equal to the US of a half a point. West North Central up 1.1. West South Central up a full point. East North Central up 0.6%. East South Central up 2.3%. New England up 0.8%. The Northeast, I've been on here saying, has very, very tight and limited inventory, some of the tightest across the country. So they only being up 0.8% is actually a little bit surprising to me. But near the highs of what we have here, those would be the three highs: 1.1%, 1%, and 0.8%. Middle Atlantic up 0.3%, and South Atlantic down 0.4%. The biggest gainer for a 12-month change would be East South Central. They were also the biggest gainer on the month at 2.3, and then 8.3 on the 12-month change, with South Atlantic coming in second at 6.2%, and then New England at 5.4% for the year-over-year change. Okay, so let me know in your area if this makes sense to you. Are you down a tick or are you up a tick? We're pretty flat. This is bad news for all those real estate doomsdayers who have been calling for just an absolute meltdown in real estate. This doesn't reflect that. This doesn't reflect 10, 20, 30% dips in prices that so many have been calling. And in fact, it appears we've actually hit our bottom on pricing. Okay, if we look at the FHFA overall chart, I've got a couple of these. Okay, so here's the cumulative monthly house price change relative to the prior peak for the US. Okay, so this is going all the way back to the 07 peak, and then obviously we had those recovery years here after the great financial crisis, after the mortgage crisis, after high levels of inventory, all reflective of nothing like we're experiencing today. Okay, not what's happening now is this time frame. Okay, and so you can see that we have a 75.5% cumulative monthly house price change relative to the prior peak. It's a pretty good gain, right? Real estate, pretty good position. You also see, if I zoom in here, let me get rid of that yellow line here for just a second. And then if I zoom in here, you can also see that since the peak of last year in prices and a little bit of bottoming in Q4, it appears we've maybe hit a bottom and we're going up. Certainly, we are now on the way up. You would, common sense would prevail and historic numbers would prevail that as we move through this spring market, prices will continue seasonally to increase month over month. These are February's numbers. You would anticipate you might see a similar story in March, for April, and for June as we move through this spring market, and you could see prices continue to increase. I'm not saying that that's going to happen the rest of the year. We have seen CoreLogic and others, Zillow being one of them, say that. I would anticipate that as we go into a recession, Q4 could get some price drops. But what does price drops mean? Just coming back down to this range here that you see over on the right? You know, we're certainly not experiencing any cliffs. We're not experiencing any sharp drops in price that are staggering or earth shattering, like so many have been rooting for the last 10 plus years, or predicting for the last 10 years. There's some YouTube channels out there that have been putting out the same videos for 10 plus years and get the same basement dwellers clicking the like button for 10 years. Yup. Yeah, home prices, they're going down. They're going down soon. And then it just never happens. Okay. So not saying that, and it has happened. Okay. You've seen prices decline and now they're going back up. But what I'm saying never happens is this 2007 cliff, this 2008 cliff, because we are not in a position like 2007, 2008. If you've been following the hot sheet, hit the thumbs up. You know that we've shared so many charts, so much data disputing that this time looks nothing like that time period. Here's a great indicator for people who are like, should I buy real estate? Is it a great value for me? Home price index for the US from January 1991 until present. Okay, the compounded annual growth rate, and this chart's available for anyone down below if they're thinking, if you're working, consulting, advising somebody who's thinking about buying real estate and they're just skeptical about the long-term value and is this the right place to put my money? Should I put it somewhere else? Should I buy a home or should I rent it? This chart from January 1991 till today tells a pretty full story. Compounded annual growth rate since January 1991 is 4.4%. And if you understand compounding growth, month over, year over year compounding on your money, then you understand how valuable that is. Compounding annual growth rate since January of 2000, even higher, 4.7%. Compound annual growth rate since January 2012, 7.4%. You can't say that about the American dollar. You can't say that about just putting money into savings. You're not going to get anywhere close to that type of return on your money. But you can put it into a physical asset. And this is what I would be talking about with folks who are skeptical of buying their house because of the long-term value. I mean, how can these prices keep going up? Well, they never stop going up. Okay, you can put your money into a home, into a piece of real estate, get enjoyment and use out of it throughout these years, and then watch your money compound year over year. You can even and think about it. If you're getting interest rates today at 6.5%, so you're getting at 6.5% today, you're still making money off of that. So that debt is cheaper than your annual growth rate. Okay, so that's the beautiful thing about real estate, is that you're basically creating a forced savings account for yourself and compounding your money year over year, and your equity. You also get that equity build up as well. So a really good chart there if you're advising anyone looking to buy a home. Okay, here's a 12-month also from the FHFA report, 12-month house price increases prior year versus most recent year. Okay, so last year we did see, and so prior year would be February 2021 to February 2022. And then the red bars, and this is a graph you can grab down below as well, would be the price change from February 2022 to February 2023. So in the US, you saw 19% home price, 19.2% price changes in February 21 to February 22, while we've seen a 4% price change, both to the increase. Okay, so even with everything that's happened in the last 12 months, interest rates hitting as high as 7.37 on the 30-year fixed, transaction count plummeting, you still see a U.S. that is strong on real estate prices, even after 2 years of 20% gains, 20% the prior year to even the one we're looking at here on this chart, to total 40% plus in real estate gains in most markets. In the last 12 months, you still had a 4% gain. That shows you how strong the belief is in U.S. residential real estate. Pacific was up 20%, but down 2.7%. Okay. Mountain had the highest February 2021 to 2022 increase at 24.5%. They still edged out a 0.3% increase in this last year. Okay. Another one to note would be South Atlantic, where they had almost a 24% prior year and are up 6.2% this year, as well as East South Central being at 20.4% the prior year and a staggering 8.3% the last year. Okay. I mentioned New England earlier at 5.4% year over year, only 18% the prior year. So typically you don't see, like in the Northeast, these huge increases that you can see in other areas which is why you typically don't see that the sharp declines in an area like that. I've got one more viewpoint here to show you how good February was according to FHFA house price index model on this 0.5% increase in a month. This is a very good 1 month measurement that is very close to or right at a normal home price appreciation month. Okay, so I took this one back for 10 years. I went back to 2013 when I pulled this off of Trade and Economics, and you can see this month here in February at the 0.5%. If I just draw a line across 0.5%, basically all of 2013 through, the beginning of 2020 sat around that line. Okay. The average would appear to be right at that line of 0.5% month over month. You obviously had some months over and some months under, but look at how tightly grouped that is between, a 0.1% and 0.8%, and kind of just a lot of them touching that 0.5% line. Then obviously we had the sharp decline here in COVID and the wild appreciation months that ensued after. And now these sharp declines that we just experienced, and now back up to 0.5% right here for the month of February. Really good sign for this spring market for home values, and a really good sign just for the strength of the appreciation that we just gained in the last few years, that's likely to carry through for some time. What happens during a recession later this year remains to be seen, but I don't expect, and the data is not showing us, especially with the lack of inventory that we spoke about yesterday and we speak about often, that we're going to see some type of huge price decline. So overall, good news from the FHFA house price index. We had an unexpected 0.5% increase in the month of February. Home prices in America are very strong, have been strong, and remain incredibly strong. Okay, so let's go over to the Case-Shiller. The Case-Shiller is a little bit lagging. I mean, like FHFA was lagging as well. But Case-Shiller's kind of the golden measurement for home prices. We've talked about Zillow lately here. You can go back and look at some old hot sheets in the last few weeks. We've talked about CoreLogic. This is the S&P CoreLogic Case-Shiller National Home Price Index that we're about to go over now, but CoreLogic also comes out with their own numbers. Fannie and Freddie, we've gone over everybody's numbers, but this here, Case-Shiller, is the gold standard for home prices. And Case-Shiller this morning at 9 a.m. Eastern time stated that home prices rose in February for the first time since June, according to their measurements. Case-Shiller index rises 0.2% as buyers compete for a limited number of homes for sale. I'm reading off of the Wall Street Journal, which was reporting this at 9:11 a.m. Eastern time. Home prices rose in February from the prior month, snapping a 7-month streak of declines as buyers competed for a limited number of homes for sale. Now, CoreLogic and others had this reported 3 weeks ago. We talked about that immediately when that news came out here on the stream. The S&P CoreLogic Case-Shiller National Home Price Index is now validating those early reports, which measures home prices across the nation 0.2% in February compared with January on a seasonally adjusted basis. Okay, so off from the FHFA, which had 0.5% that we just covered. On a year-over-year basis, the index rose 2% in February. Okay, so down from a 3.7 annual rate the prior month. So big drop on Case-Shiller on year over year, only calling a 2% raise while FHFA is calling a 4% raise. Case-Shiller was closer to a 4% raise when they came out with their index in January, and we've lost almost a full 2 points off of that. Okay, so as this Case-Shiller lagging data comes out, you may see in March a decline. When they report March's numbers, in year-over-year numbers just based off of this trend here. Okay, so the annual increase was the smallest since January 2012 for the gold standard of Case-Shiller. The annual increase of 2% year-over-year from February to February is the smallest increase since July 2012, not July 22, July 2012. After rising to a 20-year highs last fall, mortgage rates, blah, blah, we know about that. The average rate, yep, great. Prices declining fastest in Western markets such as Seattle, where prices fell 1.5% in February from the prior month. Las Vegas dropped 0.9% in February from the prior month. If anybody Las Vegas or Seattle in the comments, listen, everybody considers Case-Shiller the gold standard. You're obviously dealing with that local MLS. If you're an agent in one of those markets, love to know what you're experiencing in Seattle or Las Vegas in comparison to what Case-Shiller is reporting here on prices. And remember, this would be January to February. February's results were most interesting because of their stark regional differences. And Case-Shiller is just behind. So we've been talking about this for 2 weeks on the stream. How different these regions are. And FHFA kind of, that data that we just went over on their report highlighted that. But also we've been ahead of that curve with some of the Fortune reports and some of the other reports that we've gone over here recently. Economists surveyed by the Wall Street Journal expected the 20-city index to gain 0.4%. Okay, so they have a 20-city index. It did rise 0.4% after an annual gain of 2.6% in January. The 10-city index also gained 0.4%. Miami was the fastest annual home price growth in the country at 10.8%. Followed by Tampa at 7.7%. The weakest market was San Francisco, where it fell 10%. Okay, so those are some early numbers off of this morning's Case-Shiller index for February. Again, lagging data, of course, but highly considered, oftentimes, the gold standard for home prices across America. You can see here, I did pull up trading economics chart. And this does show us that this could, January 2023, could be the bottom, as you do see to the right. This is just pulling 1 year that February has now had that home price increase off of the peak from June in 2022. Okay, so I would expect that this number could month over month go up. Doesn't mean the year over year number when we hit March might not reflect a negative number for the first time in well over a decade on the Case-Shiller home price index. We will wait another month to see what happens there. What's happening with banks continues to be uncertainty this morning. First Republic says that deposits have tumbled 40% to $104.5 billion in quarter one, but they've stabilized since. So in pre-trading, First Republic was down over 25%. Okay, the Dow right now, since the market is opened, is only off 60 points. S&P is only off 24 points. NASDAQ's off 77 points. Okay, so let's just see what First Republic stock is doing really quick. First Republic stock, it's down 28.5% today. Okay, so investors did not like this news that deposits fell by 40% during quarter one. This is worse than what Wall Street analysts had feared. The deposit figure for the end of March included $30 billion in time deposits from 11 larger banks that was announced on March 16th in an attempt to stabilize the broader banking system. So just when we thought, this banking crisis was over, it appears not. This would make you think, what other problems are out there that we don't know about in banking? Okay, if we get recession that is highly predicted for the end of the year and more banking issues crop up, that's when we could see some real turmoil in the economy. This reminds us that this uncertainty still looms, and Wall Street is reacting to that. I guess if you're, looking for a 10-year drop, this would maybe be a little bit of news for you, as the 10-year today has indeed dropped. Of course, we follow that closely here, as we know the 30-year will follow it. So we're down 0.077 today, back down to 3.419 as of this moment right now. So the 10-year in its lowest level here in the last, I'd say, couple of weeks. We can go over here and take a look at, certainly the lowest level in the last 5 days, and, hitting near our low for 1 month. Obviously, we had the beginning of April where we got down to 3.3, but being back down to 3.4 on the 10-year is good news, and should be great news for the 30-year fixed later today. We have a chance of getting back under 6.5 with this drop in the 10-year today. We ended the day yesterday down a tick at 6.59. So trending in the right direction on the 30-year fixed. I hope that you'll stay with us here on the channel. At 2 p.m. premiering is this week's Real Word with Nicole White and myself. Make sure you're subscribed to the channel so you don't miss that. And also the link below is the last call for the BAM Mastermind on Cinco de Mayo. This is going to undoubtedly be the best value we've ever delivered. We are over delivering in such a significant way where we're doing follow-up Zooms after the fact. So make sure, I don't know what happened with my screen there. Gee, I think that was a signal. Make sure you get to the BAM Mastermind Cinco de Mayo down here in Naples. It's an all-inclusive event, and one that if you actually care about building your brand to generate leads, you do not want to miss. Take advantage of this opportunity with the link below. And make sure, again, that you're subscribed to the channel so you don't miss anything. We've got a lot of good stuff coming up. We just launched a new channel yesterday called Continuing Ed, everything that they did not teach you in real estate school. So if you just go to the channels tab here on YouTube, you can find that. All right, until tomorrow at 9:30 a.m. Eastern, 6:30 Pacific time. Have a great day, and toodaloo.